Good evening, Professor Z. So in this assignment, we are going to be evaluating this scenario where I've just inherited $75,000. I want to maybe invest in Microsoft, currently trading at $380 a share. Now, with stock valuation, you want to see what what the what the value is of that stock and whether it's undervalued or overvalued. So I'm going to go ahead and pull up Colab. And I also want to, so I made a notepad here, honestly. Um, I ran this once just to see if it would work, and it did. So I'm going to copy my scenario in Colab, and I'm going to take it from there. So again, we're going to be writing a code here. Um, okay, so this is my scenario for this assignment. We're going to go ahead and run it. And again, it's a $75,000 initial investment at $380 a share. Annual dividend payment is $3 a share, which have grown 10% annually for the past 5 years. 4% is the expected growth, which is right here, 4%. I want to know the future value of it, the present value, and whether it's under or overvalued. So we're going to go ahead and accept and then run. And it is overvalued. So the intrinsic value per share is much, much less. So it's definitely it's not worth what it's going to make me, in other words. So what I want to also analyze, and this is part of this is part of the other scenarios, because obviously if we as a financial manager, if we have $75,000 to play with, we want to see what the best routes are for success and for profit at the end of the day. So total profit. Okay, so I want to go back and calculate total profit. Okay, so I want to also know one more thing because that's going to be a comparison for me as I help understand whether or not total dividends 39.76. So that's basically going to be my cash flow. Future share value after 5 years, assuming expected growth. Total profit after 5 years, future value of the investment. Obviously, it's going to continue to grow, so it's going to be worth more in 5 years than it is today. But at, let's see here, edit the code to include the following. Now I want to so we just learned about bonds. So since that is fresh in my mind, Professor, I'm going to try that one. Let's see here. To I want to, let's see here, purchase treasury bonds that yield 4.5% annually, and it is trading at, let's call it $85 a unit at market value, market price. What is my total profit? So my total profit here is 20,000. What would it be if I was to purchase treasury bonds instead? And again, these are a sure thing because even though Microsoft is a very good company, very reputable, it would not be a junk bond. In other words, I still think that it's worth looking at the difference. So if we have either $25,000 in profit or total profit from bond after 5 years, assuming held to maturity, 30,000. So obviously we have different profit amounts, but I know that we also need to consider the market value per unit. If it's going to increase, obviously the higher the price, the lower amount of shares I'll be able to purchase, but possibly the greater amount of profit. So let's try that. What would be the new profit if each unit was purchased at, let's call it $95 a unit? So we're going to go from 30,000 at 85 a unit to, see here. Okay, let's go ahead and run it. Going from, so it would be much less because you have a smaller amount of units. So if I had more money to invest, then yes, that would be worth it. Now, obviously, as a financial manager, I think one of the main points I can make with this money is to not put all my eggs in one basket. So should I invest a full 75, a partial amount, or look somewhere else? I think that yes, it is important to not put all your eggs in one basket. So part of this money could go into a partial amount, and we could generate the code to see what uh, that equal amount would be. Maybe 40-35 or 50-25, or exactly 37, 37.5, 37.5 each, so that we have an opportunity to split up the investment and be able to grow our money and have cash flow from a treasury bond, cash flow from a dividend payment, and alternatively, we could even put some of the money at an annual 4% interest. So let's do one more. Let's say we were to invest in 3 places. So what would be the total profit if we invested $25,000 in a savings account yielding 4% annually, $25,000 in treasury bonds yielding 4.5% annually, market price is $85 per unit, and $25,000 in MSFT stocks yielding, I forget already, let's see, $3 dividend payment per share, 10% annual growth, past annual growth, and 4% expected growth. Again, total investment is $75,000. Please print profit for each scenario. What I'm doing here, Professor, is kind of expanding a little bit. Obviously, we don't want to put all our eggs in one basket. We want to try to break it up and maybe do equal amounts in three different opportunities. Let's see here. Okay. Dividends. Total profit from stock investment 6741 plus 10,000 is 16,000 plus 5,000 21,000. So we actually had greater, let me see if I can find it. We actually had a greater yield in purchasing only treasury bonds. But again, it's all about finding the right investments and making sure you're breaking up into pieces. So I still think that since $75,000 is a lot of money, but to an investor, it's, chump change. I think that this amount is definitely relative because at least it gets you, you know, continuously earning money. Now, the savings account will provide that final return and profit at the very end, whereas the stock payments with the dividends will provide positive cash flow. So will the treasury bonds throughout the years, even if it's just twice a year, and that's still okay. So I think that that's what I would do if I had that kind of money. Yeah, honestly, if I had $75,000, I would purchase treasury bonds. Try to look for a yield similar to this or at least 5%, especially after what we just learned in class. And then moving forward, I would maybe only have it in for 10 years at a time because that still is enough, to earn you a good profit. Actually, just to see what would be the profit generated from a $75,000 investment in treasury bonds yielding, let's call it 5.1% annually for 10 years. Oh, goodness. Each unit is traded at $90 per share. I didn't tell it how much it would be. Well, let's see here. Assuming it's $85. Oh, wait, oh goodness. Well, assuming it's $85, it would be, I still think we made more money before. Now, compare with treasury bonds traded at $85 versus $90. So it's going to update here and I'm going to see what's going to be the best offer. So again, $75,000 90 a unit, total profit is greater because again, you have more units to purchase after 10 years. So that means that your initial investment would be $75,000. That's what you're going to be putting up, but that's not how many units you're actually going to purchase. You're going to purchase much less. Let's see here. You're going to purchase each unit at $850. So $75,000 divided by 850 means you're going to be purchasing 88 bonds, or $75,000 divided by 983 bonds. So you have five more bonds to yield you a greater amount of money, because even though the yield or the rate is still the same. So again, professor, in a situation like this, I would maybe for 5 years, I would invest in different stocks, because that would give me the opportunity to be able to explore and see what generates greater cash flow, and also maybe look at a stock that's going to be much less than $300, because it is overvalued in this case.